Yeah, Palantir is one of these companies, we were looking at Microsoft to continue the AI play, but we wanted something cheaper for our investors. So we're accumulating Palantir on a very limited basis right now. We're looking at the stock to make easily 18 to 20%, and that's being super conservative right now because it's in a sector of growth. This is a hot sector right now, but for how long? We think it's a long-term play. We think it could easily be 18 to 24 months, and we're going to far surpass that number that we came in. They have so many uses for their AI, but more importantly, the government and security uses, those are really where we see the growth in this particular company, and of course the private sector.
Palantir Technologies' growth in 2023 was nothing short of remarkable, with its stock surging by an impressive 170%. However, opinions on its trajectory in 2024 are as diverse as the data itself. Some point to Palantir's leadership in artificial intelligence and potential for exponential growth, while others forecast a possible downturn. Today, we'll dive into the contrasting perspectives surrounding Palantir's future. Can it maintain its momentum, or are there storm clouds on the horizon? I just want to emphasize that again, Palantir Technologies experienced a remarkable 170% growth in 2023, marking a substantial rebound from the challenges it faced in the previous year. In 2022, the company grappled with a significant downturn, witnessing a staggering 65% loss in its stock value. Now, as we look at the current scenario, it's essential to assess the stock standing relative to historical highs. Despite the impressive recovery, Palantir's current stock price remains a crucial focal point, prompting an examination of its position in comparison to the peaks it reached in the past. As you've seen in the video at the start, Palantir solidifies its standing as a leader in artificial intelligence and big data. The positive impact of AI bootcamps further underscores its prowess in this domain. These bootcamps serve as a catalyst, helping businesses identify use cases for AI, a strategy that has evidently borne fruit. The reported gains from AIP or Artificial Intelligence Platform Bootcamp participants are nothing short of impressive. According to the Q3 2023 earnings call, clients showcased remarkable productivity gains. One client claimed to achieve more in a day with AIP than a hyperscaler had done in 4 months. Another reported building 10 times faster with 3 times fewer resources. Now, with Palantir's recent transition to profitability, there's a compelling case for exponential growth. The combination of cutting-edge technology, demonstrated gains from AI implementation, and a profitable trajectory positions Palantir as a potent force in the market, signaling a promising outlook for exponential expansion. But despite the positive aspects highlighted earlier, it's crucial to acknowledge a contrasting perspective revealed through technical analysis, suggesting a potential drop in Palantir's stock price. According to this analysis, an expanding flat correction is indicated based on the Elliott wave theory. The concept of an expanding flat correction involves a specific wave pattern where the market makes a series of 3 connected waves, typically labeled as A, B, and C. In this context, the analysis points towards a potential drop in Palantir's stock price, forming a wave C within the expanding flat correction structure. This scenario, if realized, could impact the stock's performance in 2024. Market trends and corrections play a pivotal role in shaping the trajectory of stocks, including Palantir. If the technical analysis suggests an impending correction, it raises questions about how broader market trends might influence Palantir's performance.
They did 1.9 billion in revenue last year. They guided to over 2.2 billion in revenue this year. They become GAAP profitable last quarter. They're going to be GAAP profitable for the full year of 23. They have free cash flow of over $550 million over the last 8 quarters. And you're looking at $2.6 billion in cash in the bank. So to classify this company as not being real, I think is ludicrous. I mean, they're every bit real. And if you ask the U.S. Army or ask the Ukraine or ask, the folks at the CDC or, different governments from around the world, if Palantir is real, I think they'll unequivocally say that they are real.
So now, what external factors could sway Palantir's fortunes in 2024? First and foremost, the increasing adoption of artificial intelligence across various industries is a pivotal player. As per recent surveys, 55% of technology officers across diverse sectors plan to invest in generative AI software within the next 6 months. Given its leadership in AI and big data, this growing trend could significantly impact Palantir. Another factor on the horizon is the expected interest rate cuts. Reports suggest the Federal Reserve is considering multiple interest rate reductions in the coming year. This could be a game changer for growth-oriented companies like Palantir. Lower interest rates generally translate to a lower cost of capital for businesses, potentially encouraging more companies to invest in growth objectives, particularly in AI and next-gen technologies. Considering these potential interest rate cuts and their economic impact, a soft landing scenario could unfold. If the economy experiences a controlled and gradual slowdown, coupled with lower interest rates, it might create a favorable environment for Palantir stock. Growth-oriented companies often thrive in such conditions, and Palantir, focusing on cutting-edge technology and recent profitability, could stand to benefit. Now, if we look at the cold, hard numbers, Palantir's current financials and revenue growth rate are under the spotlight. In the first 3 quarters of 2023, the company reported a revenue of $1.6 billion, showing a commendable 16% rise compared to the same period in 2022. This solid growth prompts a closer examination, especially in light of CEO Alex Karp's earlier forecast of a 30% revenue growth rate for the 2022 to 2024 timeframe. The current figures fall short of those ambitious projections. However, there's a silver lining. Palantir recently transitioned into profitability, reporting a net income of $147 million on revenue of $2.1 billion in the trailing 12 months. This marks a significant milestone and alters the narrative for investors. A profitable Palantir is not just a tech buzzword, but a tangible shift that could make the company more appealing to a broader investor base. Let's zoom in further and look at the profit margin, a critical indicator of financial health. Palantir's profit margin hovers just under 13%, showcasing a notable achievement in converting revenue into profit. The sustainability of this profit margin is vital for the company's long-term success. Furthermore, there's chatter about Palantir's potential inclusion in the S&P 500. With a market capitalization of nearly $38 billion, Palantir's eligibility is evident, and if it secures a spot, it could open new avenues for investment. The implications for investors are profound, as inclusion in the S&P 500 could mean increased visibility, more funds, and a potential stock value boost. But before we continue, we really want to thank you for watching this far. To be honest, Palantir might be showing some cracks in the armor when we examine insider selling in the second half of 2023. The numbers reveal a substantial increase in insider selling, with key personnel offloading almost 112% more stock, amounting to $160 million worth compared to the year's first half. This surge in insider selling can have a ripple effect on investor sentiment. Insider activity is often seen as a barometer of the company's health, and an uptick in selling may raise eyebrows. Investors might interpret this as a lack of confidence among those who know the company best, its own insiders. It's a dynamic that can influence decision-making and potentially cast shadows on the stock's outlook. Now, let's talk about the dollars and cents. Palantir's current valuation is a crucial factor in this equation. Looking at the one-year forward price-to-earnings multiples, the stock appears to be trading around fair value at 59.6 times. This implies a 3.8% premium to the longer-term one-year forward P/E of 57.4 times. Furthermore, there's something called the remaining performance obligations, a critical metric in understanding Palantir's future revenue potential. RPO essentially reflects the value of both invoiced and yet-to-be-invoiced work in a contract, serving as a leading indicator for future revenues and cash flows, especially in the tech sector. Now, let's shine a light on Palantir's RPO trends. Over the last 4 quarters, there's been a consistent decline in these obligations, with an average year-over-year decrease of $215 million. Delving deeper into the metrics, we find that most of this decline is attributed to RPOs due over 1 year later. The next 12-month RPO is still growing slightly, but the beyond NTM RPOs have been dwindling by almost 40% over the last 3 quarters. This shift in RPO trends indicates a changing top-line makeup for Palantir. The data suggests a move towards smaller deal conversions and relatively fewer larger projects, potentially offering greater revenue visibility. However, this also means reduced visibility for investors as fewer locked-in contracts exist. Investors need to consider these RPO trends as part of the broader investment landscape. The evolving makeup of Palantir's revenue sources could impact future revenue surprises. But before making any investment moves, it's wise to consider the nuanced interplay of financial indicators and market dynamics. Now, do you think you can confidently predict Palantir's trajectory, or are there more layers to this puzzle that need unraveling? Share your perspective in the comments below. And while you're at it, make sure to smash the like and subscribe buttons down below. Additionally, I highly recommend watching this fantastic video if you want to know more on Palantir stock. Just click this video right here. Thank you for tuning in, and stay tuned for more exciting content in the future.